Hi, this is Kerry Artak with Wicked Stocks, bringing you a YouTube video on the S&P 500 index. This is sort of big picture analysis. It's actually recorded Wednesday, June 29th, so you could say this is for the week of Monday, June 27th, all weekly bar charts. I'll have you know that I also at wickedstocks.com put out a daily SPY report, and that is the S&P 500 Spider ETF. And you can use those levels, are highly correlated with the levels I'm about to give you. You could use them if you're an S&P 500 index trader or an options trader. Then you can use the SPY levels quite easily. I have a number of clients who do that. I don't put out a daily S&P 500 index. That may be forthcoming, but not at this point in time. So I just want you to know that if you like this analysis, you can get it in a more precise day-to-day basis. All the formations I'm showing you here are also recreated on daily charts, so the numbers change in a very slight way on a day-to-day basis. Highly precise support and resistance levels with buy and sell signals, both short, near, mid, and long term. So let's jump to the charts. This is a weekly bar chart that goes back before the 2009 post-financial crisis low, as you can see, and it is part of a long-term channel structure that is now support that we pushed through over a year and a half ago, and at that point in time resulted in meaningful price acceleration to the upside. And now we're back at it. We are testing it. It's at 3718.62 this week, the week of Monday, June 27th, and it rises 2.64 a week. Now, I did an S&P 500 index video a few weeks ago, so these numbers are the same. The level is not the same, but the rate at which this formation is rising at 2.64 a week is, of course, the same. You may have been following this all along. Now, truth be told, we did close below this formation a few weeks ago, and by a 1% margin, just barely. But if you were a daily SPY report subscriber, you knew at the time that I was of the camp not so fast, that we really needed to see how the triple Q or the Nasdaq 100 settled out with respect to its long-term support. And as far as the Nasdaq 100 was concerned, it held its support. This is a rising 2/3 speed line projected off the March 2020 low, and I'm going to give this to you as well. It's rising at 38.37 a week for the week of Monday, June 27th. It's at 11,298.84 this week. We tested it, you can see, 3 weeks ago. We settled just above it, so there was no sell signal in the triple Q. And given the fact that this sell signal, or I'm sorry, that this let's just call it a midterm bear market following the highs from late last year into early this year. You know, the SPY put out its all-time high in early January. The Nasdaq preceded that in November. And so the sell-off since then, this sort of sequence of lower lows and lower highs, these rotational bearish moves, has been led by the Nasdaq 100. The tech industry or the tech sector is certainly more sensitive to higher interest rates than the broader S&P 500, and that is one of the reasons. So, and that is good reason really to follow the Nasdaq 100 in terms of queuing off of the Nasdaq 100 for potential longer-term buy and sell signals in the SPY. But let's get back to the SPY. This formation is rising once again, 2.64 a week. This week it's at 3718.62. And if we close below it this week by a 1% margin, that would be 3681.43. So a Friday settlement at 3681.43 or lower would indicate bearish continuation into later Q3. But once again, I want to emphasize that you also want to see the triple Q, the Nasdaq 100, the underlying index, close at 11,185.85 on Friday as well for secondary confirmation. And if both do that, if both settle below these respective support levels at these points that I'm giving you, then we actually have bearish continuation into later Q3 for the SPY itself. I would anticipate there's a correlation between two meaningful downside Fibonacci levels, and I follow Fibonacci left, right, up, and down. I use them as targets I'm more of a line study guy when it comes to trend identification. But in terms of a target and an area that could contain selling then through the balance of the year, it is these correlated Fibonacci levels. You've got AB, which is the 2009 financial crisis low, against B, which is the early January all-time high. 3/8 back is 32.62. And if you're looking at the 5/8 downside off the what I call the March 2020 COVID low, that is C on this chart against B, the all-time high, that's just below that at 3195.28. So if we close below the 3718.62 formation by a 1% margin, and if the triple Q, I'm sorry, I keep saying triple Q, and if the Nasdaq 100 also sets off a long-term sell signal by closing below that level I showed earlier in this presentation, then yes, over the next several months or sooner, I would anticipate the S&P 500 to fall into that 3195.28 to 3232.62 area where we can bottom out through the balance of the year. But we are not there yet. We are merely reapproaching long-term support that may well hold through the rest of the year. And the question, of course, is upside. What of? Let's take a look at the upside. We're going to zoom in here just a little bit, and you can see that this horizontal line represents that long-term 13-year channel top that this week is at 3718.62. So you'll have that as reference. And on the way up, what I'm saying here is holding above 3718.62 maintains, I've got a 2 to 3 month objective above the market, presently at 4256.56, this descending channel top dropping 29.28 a week. And this is our pivot point really through the rest of the year in terms of upside trade. I can see the SPY, sorry, here I go again. I can see the S&P 500 rallying up into that 4256.56 area or wherever that formation is at that time over the next 2 to 3 weeks. I think by the end of August is realistic, where we can top out on a quarterly basis, possibly through the balance of the year, and from there fall back to 3718.62. Now, along the way, I'm going to provide you nearer term channel structures that are presently in the 4038.69 to 4079.32 area. This is a band of channel resistance that uses the lows over the last couple of months, and it is our what I'd call our near-term resistance. This is an area that I'm also showing in the daily SPY report as a target above long-term support at 37.62. And so I call this like a 2 to 3 week objective, 3 to 5 week objective now, 4038.69 to 79.32, able to contain buying through July. And from there, we could fall back to 3718.62 within 2 to 3 to 5 weeks. But a weekly settlement above the 4079.32 channel structure, and once again, it's dropping 43.36 a week. You can monitor it all the way through July trade. If we settle above it, then we're probably just another 1 to 3 weeks at the most from reaching that 2 to 3 month objective right now at 4256.56, where once again we can top out into the fourth quarter, fall off from there. But if we close above 4256.56, I see a good annual low, and the market can, by the end of the year or sooner, retest that January all-time high, where we just might actually double top into early next year. But I'm way ahead of myself on that. And so, yeah, I'm giving you all the numbers here. You can scroll through, take a look. You can rewind if you need to reacquaint yourself with any of the concepts that I brought up. But once again, wickedstocks.com. I've got the daily SPY report and the daily triple Q report that will keep you apprised of all the short, near, mid, and long-term dynamics, support and resistance levels, buy and sell signals in both of those markets. And if you are an options trader in either the Nasdaq 100 or the S&P 500, you should take a look. You can get the whole package that we provide for $50 a month. That includes the daily SPY, the daily triple Q, 2 stock picks a week, the weekly DIA, IWM, and Bitcoin, and then some. So give that some thought. I appreciate if you've been watching up to this point. You have a great day, and we will talk soon.